Welcome to today's market update, where we delve into the latest movements in United States stock futures. With a critical inflation report and key bank earnings on the horizon, investors are keenly observing market trends. As we approach the opening bell, futures are holding steady, indicating a cautious sentiment among traders. The Dow futures, S&P 500, and Nasdaq 100 are mostly unchanged, reflecting a mixed close from the previous session. Investors are digesting a softer-than-expected producer price growth report, which initially sparked some optimism in the market. However, it hasn't significantly altered the outlook for Federal Reserve interest rates. Now, all eyes are on the upcoming Consumer Price Index report, which is anticipated to shed light on inflation trends. Economists predict a 0.4% increase in the Consumer Price Index for December, a slight uptick from the previous month. This report is crucial for understanding the economic landscape as inflation remains a pressing concern. Excluding volatile categories like food and fuel, the core consumer price index is expected to remain steady at 0.3% month-on-month. As worries about persistent inflation grow, especially after recent employment data, investors are bracing for potential market reactions. Factors such as proposed tariffs by President-elect Donald Trump are adding to the uncertainty. In addition to inflation data, the quarterly earnings reports from major banks are set to take center stage. Key players like JPMorgan Chase, Goldman Sachs, and Citigroup will reveal their latest financial results, potentially influencing market direction. Investors are eager for insights into how these banks have navigated the economic landscape. The focus will be on investment banking and trading revenues, particularly in light of the post-election stock market rally. Analysts are hopeful that a decline in corporate borrowing costs may positively impact the bank's top-line results. This could provide a much-needed boost to the current market sentiment. As we analyze the financial sector, market participants are also considering the implications of the Federal Reserve's recent rate cuts. These cuts may have enhanced net interest margins for lenders, offering a silver lining amid broader economic concerns. The interplay between bank earnings and inflation data is crucial for market stability. Meanwhile, geopolitical developments are also influencing market dynamics. The United States government is reportedly pushing for tighter regulations on chip supplies to China, targeting major manufacturers like Taiwan Semiconductor Manufacturing Company and Samsung. This move is part of a larger strategy to limit China's access to advanced technology. These regulatory changes are expected to create ripple effects across the tech industry, prompting manufacturers to scrutinize their customer ties more closely. Investors are watching closely, as these developments could impact supply chains and market competitiveness. The tech sector's response will be pivotal in the coming weeks. Turning our gaze to the commodities market, oil prices are on the rise as supply concerns mount. Recent reports of declining United States crude stockpiles, coupled with fears of new sanctions on Russian oil exports, are contributing to upward pressure on prices. By mid-morning, West Texas Intermediate crude has climbed to $76.75 a barrel. Despite predictions of a challenging supply-demand balance over the next 2 years, the market seems to have found some support. The American Petroleum Institute's report of falling crude inventories has reassured traders, fueling optimism in the oil sector. This development adds another layer of complexity to the current market landscape. Traders are also focused on the ongoing uncertainty surrounding Russian oil sanctions. The potential loss of Russian supply in the global market is raising questions about how alternative measures can mitigate the impact. As oil prices fluctuate, market participants are weighing their options carefully. In summary, today's market narrative is shaped by a blend of inflation data, bank earnings, and geopolitical dynamics. Investors are bracing for volatility as they await crucial information that could influence trading decisions. Stay tuned for updates as the market unfolds. Thank you for joining us for this market update. Do not forget to subscribe for more insights and analysis on the latest economic trends. We will keep you informed as the markets react to today's key events.